Hello and welcome to today's Office Hours presentation. This is Paul Hoyt. Our Office Hours is a relaxed, informal mentoring program that we do every Monday at noon Pacific time. All of the recordings, slides, and exercises are archived in our members area. And all of these recordings are available on my YouTube channel at youtube.com/user/Paul Hoyt. The reason we do these office hours presentations is because being a successful business owner can be a great experience, but I also know that it's tough. You need the education, training, tools, and team to be successful. And I want you to get to know me and my team because when you do, you'll know that we really do care about you. We want you to succeed in every area of life, whatever that means to you. We want you to find the greatness, the happiness, the divinity that we all have within ourselves, and then remember it, embrace it, and live it every single day as we try to do. Our passion is to increase the survival rate, accelerate the growth rate, and reduce the struggle rate of businesses in America. And our vision is to help millions of CEOs and entrepreneurs accelerate their business growth and enjoy greater harmony and balance in their lives. Please pass the word along to people that you know who have their own businesses. If you find these office hours presentations valuable to you or the programs and services that we have, we really appreciate you sharing the word so that other entrepreneurs and CEOs out there can gain benefit from these programs in the same way that you have. In our office hours, we have an in-depth discussion of a business success principle. I offer some closing remarks, special offers, and an invitation for next week's session. And then we have open Q&A and coaching. So as we go through the presentation today, take out a pencil and a piece of paper and write down any questions that you have. You'll have the opportunity to come off of mute at the end of the conversation, or you can simply type your question into the chat log, and we'll answer that question and address it when the presentation is finished. Also invite you to join us in the Awakened CEO communities on both LinkedIn and Facebook, where we publish a business success principle of the day on both Facebook and LinkedIn 4 days a week. And we do an energy of the day posting every single day on Facebook, offering a little bit of an inspirational start to every single day. During the call, I invite you to make your comments and ask questions, share insights and the takeaways in our Facebook Awakened CEO community. Our goal is to have 20 comments and likes in the Facebook community itself. I also invite you to attend our Awakened CEO Conversations, which is another webinar where these office hours are focused primarily on business growth. The Awakened CEO Conversation is primarily focused on personal growth. We do those every 2 weeks or so. The next one will be on Wednesday, August the 12th at 6 p.m. Pacific time, so watch your emails for sign-up information. Once you sign up for an Awakened CEO Conversation, we automatically register you for future conversations. Today's office hours topic is on help from above, the programs of the SBA. As always, I try to relate the subject matter to one or more of the key performance areas of business, and this one is focused primarily on leadership and on financial management. Leadership from the point of, if you're the leader of your company, if you're a CEO or entrepreneur, I think it's your responsibility to understand what the SBA provides and how you can take advantage of that. And one of the things that they do a lot is provide loans, which we're going to talk extensively about here in just a little bit. So that's clearly in the area of financial management. We also try to relate the subject matter of the day to one or more of the subjects of the Awakened CEO system. With the Awakened CEO system, we focus on mindset, methods, and momentum. And this is primarily a program focused on methods, the methods of planning and developing your processes and your procedures and financing your business, etc. In our agenda today, we're going to talk a little bit about this SBA. We're going to talk about what it means to be a small business and how the term small business is defined by the Small Business Administration. And we're going to talk about a lot of programs of the SBA, the loan programs, the Disadvantaged Business Program, the Small Business Development Centers, the Women's Business Centers, SCORE, and more. And we're going to sum it all up to the bottom line. So first about the SBA. The SBA was formed in 1953 by the U.S. government. It was almost abolished in 1996. There was a move in Congress to almost abolish it, but it survived that, and now it's thriving today. SBA has offices in every state, and their mission is to aid, counsel, assist, and protect the interests of small business concerns to preserve free competitive enterprise and to maintain and strengthen the overall economy of the country. And to that end, they have very special definitions about what a small business means to them. For them, it means that you're an independently owned and operated business. And by the way, that does include franchises. If you have a franchise and you are largely in the financial control of your enterprise, you do qualify as a small business from the definition of the Small Business Administration. And that means as a franchise owner, you qualify for all of the loan programs and all of the assistant programs that are available. But you do have to be independently owned and operated, and generally speaking, franchises are. In wholesaling, that means you have to have 100 employees or less. If you're in the retail and service sector, that means sales from between 4.5 million to 32.5 million, depending on the industry. If you're in manufacturing, it's 500 employees or less. And if you're in construction, it's with sales less than 14 million to 33.5 million, depending on your industry. If that's confusing to you, then join the club. It's also confusing to me. I went in to look at the exact requirements in every industry sector when I was preparing for this presentation, and I was able to download a spreadsheet with well over 1,000 rows in the spreadsheet. That's right, there are over 1,000 different small business definitions according to the SBA, depending on exactly what type of business you have. Generally speaking, if your business has revenues less than $5 million, you qualify as a small business regardless of which industry or industry sector that you are in. They classify them, by the way, by SIC codes, which are specific industry codes from the SBA. If you're over 5 million to 10 million, the odds of you qualifying as a small business are very, very good, but there are some businesses who do not qualify when they have over $4.5 million in revenue. So I encourage you to find out whether or not you qualify yourself if your business has over $5 million in revenue. If you have less than $5 million in revenue, then don't worry, you qualify. And when you qualify for the programs of the SBA, there are a lot of programs that they have available today. There are loan programs, disadvantaged business programs. They have small business development centers, women's business centers. They have a program called SCORE and a lot more. And we're going to address all of these different programs of the SBA here over the course of the next 30 minutes or so. Let's get started with what most people think of the SBA for, and that is their loan programs. They have several different loan programs. Their general small business loan program, they call the 7A program, the SBA Express variation on that program, real estate and equipment loans called the 504 program, microloan programs, and disaster loan programs. So there are 5 different types of loan programs that are available from the SBA, and we're going to talk about each one of those separately. First of all, the general small business loan program. It's the most common type of loan program there is, but unknown to most people who are not familiar with the program. The SBA, the federal government, does not loan the money directly. They guarantee a portion of the loan to a lending bank. You make application with the bank, but generally speaking, if you qualify for an SBA loan, there's much less stringent loan criteria, but it can be a slightly tougher application process. With these small business loans from the SBA, they have both line of credit and installment loan programs. Their small loans are $350,000 or less, and the maximum loan size is now $5 million. $5 million. That's a tremendous amount of money. They upped it from $2 million to $5 million in 2010 as part of some acts created by Congress to try to snap the United States out of the recession that we were in. You have to demonstrate the ability, however, to repay the loan from the cash flow of the business or personally guarantee the loan from your own personal assets. So it's not just like free money that anybody can have. It really is a legitimate business loan that you make the loan application through a bank, but the bank facilitates the lending of money from, the government facilitates the lending of the money to small businesses by guaranteeing a portion of that loan. And generally that's from 50 to 80% of the loan. So that means that the bank has much less risk when they are loaning money to you, and they can relax their criteria a little bit because they know that the majority of the loan is actually guaranteed by the federal government. The small business program is not available to every business. There are particular types of businesses which are not allowed and are not qualified with the small business loan program. First of all, lenders, real estate investors, and life insurance company. So what you cannot do is decide to start a business to, say, fix and flip houses and go and borrow the money from the SBA to purchase a house or even to fix up a house and then flip it. They're not going to loan you the money for that. Or you also can't borrow the money for private money lending. If you are a nonprofit, a charity, or a foundation or a religious organization, you also do not qualify because the loan program is only for for-profit businesses that are independently owned and managed. If you're a newspaper or a school, it does not qualify, even if you are a for-profit newspaper or for-profit school. If you have a gambling company like a casino in Las Vegas, or you have a certain, what they call prurient sexual businesses, so you can't borrow money to start your porn site. And if you are not eligible, if you owe money to the government for another loan program, or if you've previously defaulted on a loan. So if you have previously had an SBA loan and you defaulted on that loan in some way, you're never going to be eligible again for any other SBA loan. So that's kind of a word of caution there. So if you take out a loan from the SBA, do everything that you can to pay that back, because who knows 10 or 20 years later when you might need an SBA loan or really think that you can take advantage of the programs that they have available to you and be able to do that. You can't do it, of course, if you defaulted on that loan. One variation of the general small business loan program, the 7A program, is a program they call SBA Express. SBA Express is only for veterans, active duty military, National Guard, reservists, and spouses, and in some cases the widows of people who are in the active duty military. It provides to up to $350,000 in a loan program, and here's a really good advantage. There's no collateral requirement up to $25,000. So up to $25,000, it is essentially a very quick signature loan for those who have served in our armed forces or who are currently served in the armed forces. In fact, they say general approval is within 48 hours, and on the SBA website, they say that they act upon it within 36 hours. So if you are a veteran and you want to get money to start your business, say that you need some seed capital to start your business, you can do that on a signature loan and get the money within 48 hours or so. It still goes through a banking institution, but the SBA will essentially guarantee, the majority of that, or really act on the loan application very, very quickly if you are a veteran or are currently serving or previously served. One of the very large loan programs that's available to us that most people don't know much about at all is the 504 program. And this is for land, buildings, capital equipment, and leasehold improvements. So if you're a small business and you have substantial revenues and you want to borrow money to, say, buy a building and turn it into a warehouse or a commercial kitchen or your office space, or you need money to buy that next piece of equipment that you're going to put into your plant, then the SBA program might be really advantageous for you. It uses a certified development company in addition to normal lenders, and it requires that you put down 5 to 15% of owner equity in any asset. But generally speaking, you can get up to 90% financing at below market rates. So if you want to buy a building for your business and you feel very, very confident that you can demonstrate to the SBA and demonstrate to the bank that you can repay the loan out of the proceeds of the business, you may ask them about the option of the 504 SBA program because it does have below market rates and because it will offer a little higher financing, up to 90%, than do most traditional commercial business loans. And it goes up to $5.5 million, but your eligibility varies. Again, depending upon the industry that you're in, depending upon the type of loan that you are seeking, you can get, $5.5 million is a pretty substantial loan for most businesses when it comes to purchasing a building, especially their first building, or buying a lot of equipment that's going to go in the back of the plant. So if you find yourself in that category, I encourage you to find out more about the SBA 504 program and whether or not that might be for you. On the other end of the spectrum, the SBA does offer microloan programs. And with microloan programs, those are offered through microloan intermediaries. These are companies that borrow the money from the SBA and then they loan it to their borrowers. It can be used for working capital, machinery and equipment, leasehold improvements, and from $500 to $50,000 are those programs. So you may qualify for a microloan. I mean, $500 isn't much, but for some people with their business, it's exactly what they need to take that next step or purchase that first amount of inventory that they're going to resell in some way. So you may want to look into the microloan program. The disaster loan program is for areas that have been declared to be a disaster area by the government to replace or repair damaged buildings, inventory, personal property, machinery, equipment, other assets, etc. So when there's been a hurricane, when there's been an earthquake, when there's been a landslide, when there's been some sort of natural disaster or tornado, you may hear that that particular area has been declared a disaster area by the federal government. And here's why that's important. It's because all of a sudden, now there are lots of loan programs available to you that you didn't have available to you before because the area has been declared a disaster area. So if you're in a very unfortunate position of being in a disaster area, listen for that. Listen for, just like you listen for the tornado sirens, listen for whether or not that area has been declared a disaster zone. And if it has, that means some very special loan programs are opened up to you, loans that are guaranteed by the SBA so that you can rebuild, repair, and reestablish yourself in business if you happen to have the very tough misfortune of being in a disaster area. The SBA also offers disadvantaged business programs. Disadvantaged business programs are focused on helping small businesses do business with the federal and some state governments. The federal government, as it turns out, is the world's largest buyer. More than $500 billion a year they purchase from outside sources. And 23% of that is set aside for federal contracts. 23% of that, that's $115 billion at least, that is set aside for small businesses. And many states, by the way, have those same sort of what they call goaling standards. The state of California, and I think there's 12 or 13 other states that also adopt these exact same standards. So that means that if you want to do business with the state of California, or perhaps the state that you live in, that 23% of all of the contracts that are being let by the state, just like it is with the federal government, are assigned to small businesses. And there are different categories of small businesses. In fact, there are 5. There are veterans, service-disabled veterans, minority-owned and controlled business, women-owned and controlled businesses, and HUBZone businesses. HUBZone is, by the way, a certification that comes from the federal government. These other 4 certifications are self-report. So you essentially tell the federal government and the state governments that you believe you qualify for one of these 4 categories above that, and you can sign up and register for an award and to be notified of any contracts that they have coming available that meet your specific business. Whether you're a products business or a service business, they have lots and lots of contracts that they let on an annual basis. So if you are fall into one of these categories, I certainly encourage you to learn a lot more about this disadvantaged business categories and how you can become certified, and if you need to become certified in one of these areas of your business. The other programs that they have, in addition to loan programs and government contract assistant programs, are around training and education. They have several of these, the first of which we're going to talk about is the Small Business Development Centers. There are 900 small business development centers around the United States. These are typically managed by sponsoring organizations, usually universities and chambers of commerce, and they're funded through matching grant programs. These provide services to small businesses through a volunteer business advisor program, and they also have low-cost training programs that they manage. So I certainly encourage people to understand a lot more about small business development centers and understand what value they can get from the small business development centers that are close to you. I don't know how many there are here in California. When I lived in Colorado, there were 17 of them in the state of Colorado. So there's probably going to be one, in every large city that has over 300,000, 400,000 in population. You'll find a small business development center where you can go and get assistance with training and education and find some people who will help you start and grow your business too. Just like there's small business development centers, there are women's business centers, not nearly as many. There's 110 of these across the United States. They're very similar to their small business development centers in their focus, but they of course focus on women's businesses only. They receive an up to $150,000 grant from the SBA to administer the program. So some local women's charity, for example, well, probably not a charity, but a university who wants to focus on women's programs could start their own women's business center, be eligible for a matching grant or a loan from the SBA, not a loan, but a grant from the SBA to develop the programs and to administer the programs to help women get their business started and grow. In addition to the small business development centers and the Women's Business Center, the SBA sponsors a program called SCORE, and SCORE stands for a Senior Corps of Retired Executives. There are 350 chapters of SCORE across the United States. They provide free mentoring and counseling to small businesses, but I do have to say that it really makes sense to be cautious when it comes to getting a SCORE advisor, because I've seen some really excellent SCORE advisors, and I've seen some SCORE advisors who are not quite so excellent. The really excellent ones had startup experience, and they had, I would say, a startup energy about them. They really understood, the intensity with which someone needs to focus on a startup business in order to make it successful. But I've seen other SCORE folks that never had any startup experience, that they operated, let's say, on a different wavelength or on a different energy level than startup businesses needed to operate. And I think they, in fact, did not help the small business or help the startup business very much at all. So make sure that you vet, which means to check into and ask the references of anybody who says that they are willing to be your SCORE representative. Like I said before, some of them are just excellent, and it's a fantastic opportunity for you to get free mentoring and counseling for a long period of time from somebody who really knows what they're talking about because they've got the experience. But make sure that the SCORE volunteer that you get assigned to you, in fact, has that entrepreneurial mindset and has that entrepreneurial experience. As they say when they're talking about the lean startup methodology, a small business, a startup business, is not a smaller version of a large business. A startup business has to operate with a totally different mindset than a $30 million, a $50 million, or a $1 billion business. And not every executive has that experience, and not every executive has that mindset. The SBA has a lot of other programs. In addition to the loan programs, the SBDCs, the SCORE, the Women's Business Centers that we've talked about so far, they have other programs too that I'm not going to go into a lot of detail about, but I do want to make you aware of these programs. First of all, they have the Small Business Investment Corp. We talked about those in our last office hours presentation. There are 292 across the United States privately owned funds that essentially work with the SBA to have venture debt. So venture debt complements angel investor and venture capital investments in a business. If your business is strong enough, if you can demonstrate that you're in profits and you can repay loans, but you can't repay, you need more money than just what you can typically qualify for with a loan program to take advantage of your expansion opportunities, you may be of interest to a Small Business Investment Corp, an SBIC, where they would purchase equity in your business and would, through their special arrangements with the SBA, arrange for you to get a loan in existence. So if you needed $10 million for your business, you may be able to get $5 million in an equity investment and $5 million in a loan from the SBA, which, by the way, means to you that you're selling less ownership in the company. You get to keep more ownership in the company because you're getting a substantial portion of the funds you need for expansion in the form of a loan instead of getting it all in the form of investment capital. The SBA also provides surety bonds for construction. So like loans, these are guarantees through other surety companies, which, by the way, are insurance companies. So if you have the opportunity to take on a $2 million construction project, but they require you to have a $2 million surety bond for it, and you haven't qualified for that yet, you may be able to turn to the SBA, which can offer you assistance in getting the surety bond that you need to be able to take advantage of that contract. And by the way, this is especially true with the federal government and state governments who have disadvantaged business programs. So if you are a disadvantaged business and you have a construction company and you have the opportunity to bid and receive an award for a construction project with the federal government or state government, you may also be able to turn to the SBA to get the surety bond that you need in order to take advantage of that business opportunity. The SBA also offers a tremendous amount of courses and articles and templates online via their Learning Center. I found 60 courses when I took a look at the SBA's website this morning, and articles and a whole bunch of other stuff that's there for free. So just like we do here at our company, try to provide a tremendous amount of information free to our prospects and to our database and to our customers, the SBA has a lot of programs as well. And yet there's still more. The Veterans Business Outreach Centers, there's 15 of those across the United States in 10 different regions across the United States. So again, if you're a veteran, you can find the closest Veterans Business Outreach Center, which, like the Women's Business Centers, focus specifically on veterans. And there's even Export Assistance Centers, over 100 of them. So if you want to expand your business to work with foreign countries, to expand your market or to reduce the seasonality in your business, for example, you may be able to get assistance from Export Assistance Centers, and there's a whole bunch of them out there. And if you decide to do business with the federal government or state governments, there are procurement and technical assistance centers, and over 100 of them in the United States that will help you learn how to do business with the federal government or the local state governments and give you assistance in that process. So here's the bottom line. The bottom line is there are a whole bunch of programs available from the SBA, from load programs to training programs to free assistant programs in a lot of different categories. And it's a very good idea for you to study the programs that are available from the SBA and understand what's available to you. But it's also a great idea to work with financial advisors and business consultants who are familiar with these programs and can recommend them to you when the time comes for your business. That's been our planned part of our program today. Our agenda, we talked about the SBA itself. We talked about their definitions. There are many, 1,000 different definitions they have for what qualifies to be a small business, and the programs of the SBA, the loan programs, the disadvantaged business programs, the Small Business Development Center programs, the Women's Business Center, SCORE, and a whole bunch more. And we also summed it all up with the bottom line. So here's your homework. Review the SBA website for a lot more information on the stuff that I covered at a very high level today. Try taking an online course or two and see what you think about the quality of those courses and if it's something for you. I encourage you to find a local small business development center, a women's center, or a veteran center, or an export assistance center, and become very familiar with the programs that they offer, and then ask your peers, your business consultants, and your financial advisors about the SBA, and in particular, their experience with the SBA, so that you can become more familiar with that. We're going to go to open questions and answers and coaching here in just a minute, where we encourage you to make comments and ask questions on the subject matter of the day, and then any other issues that you want to talk about relative to starting and growing your business. I really want to know what your biggest insights and takeaways have been from this presentation and from other presentations that we do, and tell me what you're going to focus on. Here at the Hoyt Management Group, we offer a wide variety of support services. In many cases, we have education and training programs. We have programs where we do it with you, where we collaborate with you to write business plans, to create product funnels, to create a variety of sales and marketing activities at your business, anything focused on growth management. And in some cases, we'll actually do it for you as well. You can hire us to take on an operational role at your company and to do things for you, and we'll deliver on that just as any good consulting organization should. I encourage you to put on your calendar our next Awakened CEO conversation. It's an interactive webinar with a special guest. Our next one's on Wednesday, August the 12th at 6 p.m. Pacific. Watch your emails for sign-up information. And our next office hours is going to be on Monday, August the 10th. We are skipping a week because next week I'll be at CEO Space, where I go 5 times a year. So 5 times a year we typically skip one office hours, but I'll be back in my hotel room on August the 10th, and like we usually do in that second week of CEO Space, it's going to be live group coaching. So think about anything that you want to talk about starting and growing your business, and we'll be happy to address your questions and discuss the topics that are of most interest to you on our live group coaching call on Monday, August the 10th. Let me know what topics that you would like for me to address in these presentations at paulssurvey.com. And in the meantime, in between now and the time that we meet again, which will be 2 weeks from today, do your homework. And with that, we're going to open it up to questions and answers and coaching. First, comments and questions on anything on the topic of the day, and then anything else that you want to talk about. Stephanie, do we have any questions or comments?
We do. First one, have you ever worked with the SBA?
I have worked with the SBA. Back when I was in Colorado and had the first several years of my business, I was on the board of directors of a local small business development center. It was sponsored by the Southwest Metro Denver Chamber of Commerce. I'm not sure if it's still there or not, but I got in on the ground floor of that, and I got to be on the board of directors. And I was also one of the volunteer advisors, and I also delivered some of the low-cost training programs that they had available at the SBDC. So I got to know the people there and their passion for helping small businesses get started and grow, and a lot of the other volunteers that were volunteering to provide programs to the people who are members of the SBDC. And generally speaking, it provided a really nice start for me in my business. And that's kind of, one of the features of that was that the people who volunteer to deliver the training programs or the very low-cost training programs through SBDCs are generally kind of getting started in their business. That's what we saw. Very experienced consultants like myself and my team, and I've been in business consulting now for 14 years. So it was really something valuable for me to help me get started as a business consultant in the first 2 or 3 years of my business. But thereafter, I stopped doing advising and giving away my time for free. I stopped doing the low-cost training programs in favor of the free training programs that we do now here at Hoyt Management Group and the for-fee education and training programs that we provide later on. So I've had a lot of experience as a member of the board of directors, as a volunteer advisor, as one of the trainers with a small business development center back in Colorado in the early days of my consulting career. So I have fond memories for the people that I met there, both the people who are starting their business and my other coaches and consultants and fellow members of the board of directors. Next, Stephanie.
All right. Do you know anyone who has actually received an SBA loan?
I do. As a matter of fact, I got an SBA loan. When I started my first business in 1980, I knew I needed some capital to start my business, but I didn't have a lot of liquid capital at that point in time. So I decided to look into getting an SBA loan through my local bank. And it was really not that difficult a process, but it was probably much easier for me than other people because I had a pretty nice high credit score, and I had the ability to collateralize the loan with a certificate of deposit. So I had, as part of my retirement program, a certificate of deposit for, I think it was around $10,000. And I was able to put that up as collateral for the loan. So having a high credit score and having the ability to fully collateralize the $10,000 loan that I got from the SBA made it fairly easy to get that SBA loan. But I had, of course, no business at that point in time, so there was no way that I was going to demonstrate that I could repay the loan through the profits of the business. But nevertheless, I was able to qualify for an SBA loan and got the SBA loan and paid it back. I think it was on a 3-year payback with installment payments. It was an installment payment for $10,000, so the payments were like, $300 a month, $270 a month for 36 months, and paid back the loan. So I am one of those folks who is in good standing with the SBA, borrowed the money, did exactly what the SBA was intended to do. Help somebody achieve the capital that they need, the liquid capital they need to start and grow the business when they first started and grew the business. And yes, by the way, I started my first business that I was in business for 5 years with a $10,000 investment. And that $10,000 investment came from an SBA loan that was fully collateralized by my own retirement savings. So yeah, you can do it. And as I recall, the process didn't take that long and wasn't that painful. It was just like filling out a loan application. So maybe it was made easier by the fact that I didn't have any financial history and results, and I just said, hey, I'm just getting started here. So that probably made it a little bit easier. If you've been in business for a while, I'm certain that the bank is going to want you to submit financial records and statements. I don't know, at some point in time, I know they're going to want them to be audited, but I don't think that happens until the loan gets out of what they consider to be the small loan category, which is $350,000. If you're going for a $5 million loan from the SBA, my guess is that they're going to want a lot of information about your business, the history of the business, the future of the business, probably fully audited financial statements, etc. But my experience with the SBA, in both cases, in getting the loan when I started my first business, and in working with the Small Business Development Center when I started this current business, my second business, was really very nice indeed. Next question, Stephanie.
Okay. I have a woman-owned business. How do I get contracts with the government?
That's a very good question. So as we mentioned with the Disadvantaged Business Program, also called the DBE, or the Disadvantaged Business Enterprise Program, there are 5 different classifications of business that you can say, I have a disadvantaged business here. And being a woman-owned business and controlled business is one of those. So generally speaking, I encourage you to go to a local SBA procurement and technical assistance center to find out about signing up to make yourself eligible to bid on government contracts, federal government contracts. The process, by the way, isn't particularly easy. You have to get it done in Bradstreet number. You have to make sure that all your business licenses are in place. You have to fill out a rather extensive program online called SAM, S-A-M, stands for Systems of Award and Management, System for Awards and Management from the federal government. It takes a long time to fill out that form on the website. I've done that for my own business, and I actually have done that for a couple of clients as well. So I'm well familiar with the DUNS and SAM process that you have to go through. And then once you are qualified to be able to bid on contracts available from the federal government, then you can look online and find out all the contracts coming down for you, and you can bid on those just like anybody else. There are, by the way, a whole bunch of websites and other businesses out there that will do the research for you and deliver to you very specific contracts that are in a specific location, that have a specific size of business, that fit your particular industry niche, and deliver those to you, so you don't have to go through all of the searching through the government websites to find all of the business opportunities, the contracting opportunities for yourself. And generally speaking, I recommend that you find one or more of those who will help you filter through the mass of government contract opportunities that you have available. And then you bid on the process. And unfortunately, with women-owned businesses, I think that's one of the categories that is the most heavily populated category that there is. So you will be in competition with a lot of other women's owned businesses for the amount of the federal government contracts, and in some cases the state government contracts, that has been set aside for women-owned businesses. And by the way, we talked about that 23% earlier. There's some portion of that. There's like 3% for veterans and 3% for service-disabled veterans and 5% for women-owned businesses and 5% for hub-zone businesses. I'm not sure of exactly what the percentage is, but it's just not 23% for all of those categories. There are very specific allocations depending upon whichever category you are in. So then you have the ability to go after the state or the government contracts. Here in California, by the way, and you may find this true with your state, is the state has a separate institution or agency that is designed to manage those people who want to do business with the state and who consider themselves to be a disadvantaged business enterprise. Just like the federal government has their program of registration, here in California, there's another program for registration, and you're not allowed to bid on state contracts as a disadvantaged business until you've gone through the California agency that certifies you as a disadvantaged business enterprise. So that may be the case for you in the state that you're in, whatever state that you happen to be in. You may need to go through a state as well. I think I mentioned earlier, but let me make sure that I say this. There are 12 or 13 states that adopted the federal government's goaling standards. So the state of California, for example, has set aside 23% of all of the contracts that they let with individual contracts and with prime contractors to the disadvantaged businesses. So that's kind of a flow-through or a cascading model. So, for example, if the federal government lets a contract with Lockheed Martin, which, by the way, is the world's largest contractor with the federal government, like $24 billion a year in contracts with our U.S. federal government, they are obligated to take 23% of that $23 billion and pass that through to small businesses, just as if you were contracting directly with the federal government. So prime contractors with the federal government, as long as that contract is over a particular size, and I think it's $450,000 for regular, or $650,000 for regular contracts, and $1.5 million for construction contracts. As long as the prime contractor's contract is over that threshold, then they are obligated to let 23% of their subcontracts out to disadvantaged businesses, just like the federal government is. So you don't have to do business directly with the federal government. You can do business with prime contractors who have done business themselves with the federal government and be able to take advantage of the set-asides that they have for veterans business, veteran-owned, service-disabled veteran-owned business, minority-owned business, hub-zone businesses, and for your case, the women's-owned business. One word of caution, by the way, about this. The language of the law is very specific. that it's not just that the woman owns the business or the minority person owns the business or the veteran owns the business. They have to control the business as well. And that means the minority person, the woman, the veteran has to have the highest title at that business. They have to be the CEO of the business, and they have to participate in the daily operations of the business and be responsible for all the decision making, just as if any other CEO would be. So don't go into business thinking like so many construction companies did when these programs first came about in the 1970s, is heck, I'll just make my wife 51% owner in my business, and then I'll qualify for the programs. And that's not the letter of the law. The letter of law says that the minority, the women, the veteran has to not only own the business, but they have to control the business. And here's why that's important. If you decided to go after a government contract or a state contract, and you said that you were a qualified disadvantaged business, and you were just 51% owned but not controlled, you're breaking the law. And if you're breaking the law, you're committing mail fraud, wire fraud, some other intent to defraud the federal government or the state government, and you can get thrown in jail for that. Hefty fines, hefty penalties, and jail time if you're doing it, in a fraudulent manner. So my encouragement with this law, as it is with every law, is not only understand the spirit of the law, understand the letter of the law, and make sure you're not breaking the law whenever you decide to do business with the federal government or the state government as a disadvantaged business. Hopefully that was helpful to you. As it turns out, I know a lot about disadvantaged businesses because I have some business partners who are disadvantaged businesses, and we've studied this program a tremendous amount. So if you're welcome to give me a call or just send me an email if you have other questions on that, and I can point you to some real valuable resources there. Next question, Stephanie.
Well, you kind of answered some of these, but if you could go into a little bit more about the other advantages to being classified as a disadvantaged business. Will companies other than the government give you a break?
I don't know. Companies who are not operating in the context of a federal contract or a state contract are not obligated by law to give disadvantaged businesses a break. But I do know that other businesses do. Here's an example. Walmart. Walmart extends the ability or the authority to somebody who's operating a local Walmart store to have a little regional or a local supplier put their products on their shelves. They can do that. They've got a little bit of shelf space that they can play with. So in that way, Walmart extends the authority to their individual store managers to help out a small business by seeing if their products will sell well at that one specific Walmart whenever they want to. Other large businesses, IBM, General Motors, I am sure have programs that are designed to facilitate and honor and encourage and support small businesses in their specific area. And I'm sure it would be helpful for you to be certified as a disadvantaged business in some way or another, so that you could pick up the phone and call that local large business and say, hey, do you have any programs that are any set-asides, any special programs for disadvantaged businesses like myself? And I encourage you to do that. I encourage you to get certified if in fact you are a disadvantaged business, owned and controlled business, and then leverage that to your advantage. So businesses outside the context of federal contracts and state contracts are not obligated to give a break to small businesses, but they might choose to do so anyway. And by the way, I haven't said that some cities also have adopted those goaling standards. I believe that's the case, that some very large cities also have adopted the same sort of federal government goaling standards that some states have adopted and are required for all federal contracts. So you might look at that as well. If you choose to do business with any government agency, you might ask to see whether or not they have any set-asides or special programs for small businesses or small disadvantaged businesses that might facilitate you in winning the contract with them. Next question, Stephanie.
Well, this is the last one, and this actually is mine. And I know I've heard from others that there are some advantages of being approved for an SBA loan, specifically getting additional funding as you're growing and expanding, and working with angel investors and others. Have you heard of anything of that? Is that true?
I haven't heard of that. I can think of a couple of reasons why that might be to your advantage, though. If you had an SBA loan, for example, and you were paying off that debt, and you had personally guaranteed that loan, if I was going to invest in your business, if you've put in that money, generally you've got more skin in the game, right? Because if it's personally guaranteed, and it's personally guaranteed by the SBA, or to the SBA, then I know that you've got a lot of skin in the game. And it's not quite like the business having borrowed money from the bank. Because if you default on a business loan through the bank, the bank can, essentially salvage the assets and take ownership of all the equity in the business, if there's any assets at all, and can try to get their loan repaid from the assets of the business. But that's not quite the same as an SBA loan, where you have to personally guarantee it. So generally speaking, it means that you've got more skin in the game, and that you're less likely to actually default and walk away under anything that comes up. The other reason why it might be to an advantage is if you have an SBA loan and you have repaid that loan, or if you nearly have repaid that loan, then as a potential investor, I can look at you and say, you know what, I think there might be an opportunity to get another SBA loan. Yeah, and that's generally true. If you demonstrate a good track record, a good payment history with the SBA, then you can come back in a couple of years, and a year after that, maybe you can get another equipment loan, or another real estate loan, or another working capital loan later on, because you have demonstrated the ability to be a good borrower from the SBA's point of view. So I can see that being true from a couple of different perspectives. One is that you've got more skin in the game, and second is that you have another lending source here. There's another funding source that's available, which makes the business more attractive to angels and perhaps venture capital. As a word of caution, though, generally speaking, I really recommend a lot of caution for any business that's borrowing money. You really have to make sure that you're able to repay the debt through the profits of the company, and it's a really good thing. For startup businesses, going out and borrowing, $50,000 or $100,000 from a private lender, or or otherwise through the SBA or through anything else, just make sure that you can pay that back. Because debt service, you don't want debt service to be the majority of the use of profits that you have. I was looking at a company the other day, and they were making, let's say, I'll just use for example, they were making $100,000 in profits a year, but they owed $80,000 a year in debt service. So that meant they only had $20,000 a year in profits to invest in growing their business, because they had already invested 80% of their profits in borrowing money to get to that position in the first place. You really don't want to be in that position. You don't want your debt to equity ratio to be very high. You don't want your debt service to be a significant portion of your profits. In fact, most banks, by the way, don't want your debt service to be more than 20 or 25% of your operating income every year, because they know that you're going to need the money to the other profits to expand the business, to invest in new programs, to invest in new people, for working collateral, for inventory and accounts receivable purposes, etc. So there's a lot of good reasons to hold down on the amount of debt that you have with anybody, whether it be the SBA, a private lender, or a traditional bank, as you grow your business. And I encourage you to talk to your financial advisors and consultants to help you make good decisions when it comes to raising capital or getting the funding from your business, whether it be through equity funds or through debt. And that brings us to about 12:58 or so. I think I've got one person here that I see has their hand up. The name is Mehdi. Mehdi, I'm going to take you off of mute and invite you to say hello to us here. I don't know if you can or not. Are you there?
Yes.
Yes. What, do you have a question or a comment for us today?
Yes. I wanted to know what's the minimum credit score point that's for SBA loan to get approved for SBA loan.
You know, I don't know, Mehdi. My guess is that most banks, it's around 630, 620, something like that. You get below 600s, and they start to, look at you with a little bit of scants or something like that. But I think if your credit score's over 600, and especially if it's over 630, that there's a line that you cross about 630, and another line about 720, and another line about 800 when it comes to your credit score. I think that you may qualify. I'm certain that of course, since you're really looking at the bank's loan criteria, the bank might cut you a little slack. If their loan criteria says you have to be a 680 and you come in at a 650, they might cut you a little slack if the SBA will guarantee a portion of the loan. But generally, I think if you're in the 600s, that it may be something you could give it a shot. That's an excellent question. I appreciate that.
Thank you.
Was that helpful to you?
Yeah, it was helpful. Thank you.
Great. Thank you for tuning in today, Mehdi. I'm going to put you back on mute. And that's just in time to say thank you very much to everybody who attended today's call live, and to those of you who are listening to the recording. Here at the Hoyt Management Group, we are passionate about doing everything we can to help you increase your probability of success, accelerate your growth, and reduce the ways in which you struggle in your business. And until we meet again 2 weeks from today, on Monday, August the 10th, this is Paul Hoyt wishing you a most marvelous and prosperous day. Bye-bye.